Ladies and gentlemen, welcome to this week's Thrive in China Roundtable, where we are discussing how to calculate your personal income tax liability in China. So let's get cracking. So to give you a bit of a backstory, a back history. On August 31st, 2018, the second draft of the individual income tax law was passed. The law currently made changes to many elements of the calculation and enforcement of IIT, individual income tax in China, focusing on expanding deductibles, adjusting tax brackets, changing residency rules, etc. Now, the aim of this IIT law that came out in 2018 was to ease the tax burden for low to mid-income earners, while taking a tougher stance on foreigners residing in China and obviously earning a higher income. As the cost of living in China has rapidly increased in recent years, the IIT law offers some relief for lower income earners by reducing their tax burden. Now, the new tax brackets and the standard deduction amounts took effect as of October 1st, 2018. So we're 4 years into this. And many of the implementations were actually done as of January 1st, 2019. Now, just to highlight, there will be further changes, particularly for foreigners, that come into play or that will end as of December 31st, 2023, but we will touch on those later on in the presentation. Now, why am I touching on all of this? Because why am I touching on the history and highlighting what came out in 2018? I'm highlighting it because when people Google individual income tax in China and how it is calculated and how it pertains to them, they don't actually look at the dates of the articles they're reading. And so I want to highlight that anything that you read prior to 2018 is false information and not actual. So please make sure that you are referencing the right individual income tax law to understand how it stands now and how it would apply to you or your team or whomever you're hiring, whatever talent you're hiring in China, how it would apply to them now. So hence why a lot of this content is also going to relate to the past. So you are fully aware of what these they're not new anymore because we're 4 years into this, but what the current regulations are highlighting. So under this new regime that came out in 2018, the tax thresholds were increased from 3,500 RMB to 5,000 RMB effectively. It used to be 3,500 for locals and 4,800 for foreigners, but now it's unified as a deduction of 5,000 RMB for everybody. Taxable income is calculated on an annual basis now, not on a monthly basis. So actually, you have to look at the calendar year, the fiscal year, January 1st to December 31st. That is the fiscal year in China. That is how your income tax will be calculated, is based from the period January 1 to December 31st. Annual income is calculated by including all income from salary, wages, bonuses, labor income, author's remuneration, royalty fees, dividends, with a standard deduction, which is the 5,000 RMB per month. It's actually an annual deduction then of 60,000 RMB, which is automatically deducted from your gross salary. Okay. Now, I want to keep everybody's mind in place. This is what the law states, and we'll go into actuality. How does it really look? So based on the fact that we are calculating now on an annual income, this is what the table looks like to calculate your annual income, okay? So when you're looking at your income that you're earning from January 1st to December 31st, and it's not just about salary, it's salary, bonuses, commissions, rental income because you've bought a property and you're renting it out, whatever income you are earning. And this is why I also want to highlight that there will be deductions made by your company based purely on your salary, not based on your total income, which is why you have to do annual filings yourself as well. But let's take a step back there. So annual income, this is actually what it looks like There are 7 grades, 7 levels, and you have to basically choose the right grade that fits your gross annual taxable income before tax. So when you're calculating your monthly salary times 12, looking at the bonuses you might earn in that calendar year, you might fall into, let's say, grade 5, which is an annual salary, gross salary of between 420 and 660,000. You then follow that line. You can see the next column, the third column from the left, is what the rates look like prior to 2018. And if you look in the fourth column, you're going to look at the associated tax rate. So if you're in grade 5, your associated tax rate is 30% of your annual income with a quick deduction of $33,016. There are 2 deductions. Let me go back to the previous slide. As you can see from the last point there is an automatic standard deduction of 60,000 renminbi from your annual gross salary. So when you are looking at the table and you're trying to find what grade you are in, make sure that you have already deducted that 60,000 renminbi. There is then a second quick deduction, which is made when you computate your salary. So then you have an understanding of how much income tax you will pay on an annual basis. Now, let's look at the practical side of things. If you are working for a company in China, they will act as a withholding agent with the tax bureau to withhold the income tax based on your salary income on a month-to-month basis. So if you're looking at your monthly, just purely your monthly salary, no bonuses, commissions, or anything else, you will look at that column, understand what grade you are in. So if you are in grade 5, it's a salary of between 35 and 55,000 renminbi per month. You're going to pay 30% tax. There's a 4,410 quick deduction, and the company will withhold that income tax amount. Okay. And actually then pay it annually come the next year. All right. This does not include, obviously, all additional salary or all additional income that you might be earning from other parties, whether that is rental income, commissions, bonuses, etc. There are different formulas that are utilized for bonus that needs to also be taken into consideration. So again, my suggestion is, if you are truly trying to understand how taxes are created, go to your HR or go to an external party to create a simulation for you so you have a clear understanding of what your tax liability might be for the whole annual year. Like I said, the only responsibility from the company is to withhold the salary component. Bonus is calculated in a different methodology currently, but that will also change come December 31st, 2022. Now, the adjustment of the tax brackets that were made in 2018 will mainly lead to tax relief for individuals with low to medium income, particularly those that are in the range of the 3%, 10%, 20% tax brackets. The 25% tax bracket has been just generally narrowed. And obviously those that are in the higher tax bracket, which is predominantly a lot of the expatriates that are seconded to China, they're going to have more income tax liabilities if they hit the 30, 35, and 45%. Okay. Keep in mind that when you are doing the simulation, and if you're looking to do a month-to-month simulation, your taxes for January will be much lower than your taxes for December, because actually we're looking at it over a 12-month period, and there's an accumulation that is done month to month. The best is, if you really want to have a proper understanding, is analyze it on an annual basis. You can't divide that by 12 because your income for January is going to be, let's say, 30,000. The income for February and the tax calculation is going to be based on January and February, so 60,000. So that's why the tax always looks a bit different. Now, for foreigners, we're going to look at special deductions that apply to them. Unfortunately, in China, local mainland Chinese do not get any special tax deduction items. Basically, even if they get allowances and they put that as the total compensation, they have to pay taxes on that. Which is why, actually, pre-COVID, there was going to be a law that was going to be implemented as of Jan 1st, 2022, which was that certain deductions would be eliminated for foreigners. One of them being education expenses for children, housing rent, and I believe it was language costs. So I want people to be aware that this still is a deduction for foreigners, but it will be eliminated according to the current regulation as of December 31st, 2023. They expanded it for another 2 years due to the COVID situation. All right. Now, special deduction items, you have support for the elderly, expenses for further self-education, i.e. Mandarin classes, education expenses for children, healthcare costs, housing loan, housing rent, and people who actually donate to charitable causes. These are all tax deductible items. And obviously, in many instances, your company might not even be aware that you are donating to charitable causes, which is why the company is only deducting what they are aware of, okay? And which is why actually the annual income tax filing, which you have to do as an individual, it is not the job of the company. You will have to declare then any donations that you make throughout the year. Now, do the traditional tax exemption benefits for foreigners still exist? With current regulation, yes, they do. But I want everybody to be aware that come December 31st, 2023, 3 tax exemption benefits will be revoked for foreigners, one of them being housing, one being language training, and one being children educational expenses. Those will no longer be tax deductible. So make sure, again, you create simulations and you have discussions with your employers about suddenly having a higher tax liability and earning less net income, and whether they will balance that out, or make sure you've got these conversations planned in the agenda ahead of time so it does not become a shock for you come January 2024. A lot of this comes into HR planning and budgeting. So if you are watching this and you are joining live or you're watching this on replay, please, please, please do make sure you have these conversations with your employers. Now, there are a lot of you that, and I'm talking about, sorry, let me be specific. There are a lot of foreigners out there that are being seconded to China for interim periods, not necessarily for permanent stays. And it's very important to understand as a foreigner, what is your tax residency status and how does it apply? So there are 2 types of taxpayers for foreigners, namely resident individuals and non-resident individuals. The length of residence used to distinguish between the 2 groups is adjusted to 183 days versus a full tax year previously. Okay, so previously it used to be 365 days, now it's 183 days in a tax year. And a tax year is a calendar year, that's the fiscal year, it's January 1st to December 31st. So what does this all mean? It means that if you are in China for less than 183 days in a calendar year, you are a non-resident. If you are in China for more than 183 days, i.e. from 184 days, you will be considered a resident in China and be domiciled in China and therefore have to pay income tax in China. Okay? Resident individuals at this very moment have to pay income based on the salary they are earning for the job that they are doing in the Chinese market. It is not based on worldwide income, okay? And most of the time, you will, similarly to employers, you will have to figure out a way to get your income tax deducted on a month-to-month basis by a withholding agent so that you don't get into any trouble. I want to highlight here a very important point, which is that if you enter China through Shanghai and you will be residing in Shanghai and you overstay in Shanghai, you could have issues when you are exiting Shanghai because the immigration department and the tax department are now in sync, meaning that they're going to track your days and you might have penalties for overstay that relate to individual income tax that you then have to pay in cash at immigration at the airport before you can be passed through to take your flight. Okay. So I want people to be aware. Now, if you start switching, moving, you arrived in Shanghai and actually you're traveling throughout China and you leave from Beijing or Shenzhen, you might be able to get away with that because you're going from place to place to place, and it'll be very hard for the immigration departments to track all of that. There's your loophole if you're asking in terms of how to avoid that. But please be privy of these rules and regulations. Now, in 2018, one of the biggest issues for foreigners in China was that there was what we call a 5-year residency rule, meaning that it's fully clear if you surpass the 183 days, you are considered a resident and you pay income tax based on your China designated salary. But if you then are residing in China for 5 years, you will be liable to pay on your worldwide income, regardless of where you are making that income. So the big question was for foreigners, does this 5-year residency rule, does it still exist? Does it apply, or has it been changed, etc.? So I want people to be aware of what the regulations are and how it can apply to them and how they can break their residency rule. So compared to the previous 5-year rule, the 6-year rule, so now it's been upgraded by 1 year, the 6-year rule provides a looser tax policy for foreigners. And this includes residents for Hong Kong, Macau, and Taiwan who work in China, but also earn overseas income. The relaxed stance on taxation of foreigners overseas income is part of a policy to attract foreign investment and encourage high-level foreigners to actually come to China. Now, the key points of the 6-year rule are, under the old policy, if a foreigner stayed in China for 5 consecutive years, his or her worldwide income would be taxed in China. Now the 5 years is extended to 6 years, allowing foreign workers in China more time to avoid paying income tax on their worldwide income. In relation to the 6-year rule, if there's a single departure, one departure outside of China of more than 30 consecutive days, at any point during the 6 years, the clock to count the tax residency will be reset. So I'll give you an example. You arrived in China in January 2019. You have 2019, 2020, 21, 22, 23, end of December 31st, 2024 to break your residency. Otherwise, January 1st, 2025, you will be taxed on your worldwide income. Now, obviously with COVID, with the zero COVID policy, with restrictions on traveling in and out of China and quarantine regulations, people have forgotten about this residency rule, and many of them are kind of stuck in this. In order to break this residency rule at any point in those 6 years, so you arrived Jan 1, 2019, if you departed in 2020 and you left for 30 straight consecutive days, the minute you come back, your residency starts from 0. Meaning from your return date, which maybe was, I don't know, January 2021, you have then until 2027 to complete your residency rule, okay? Now, this is something to keep very much in mind, especially during the pandemic, through lockdowns, through quarantine regulations, all of that, to make sure that you continue to break your residency. Prior regulations basically stated that you had to do 30 consecutive days and 90 days in total in a year. That 90 days has actually now been removed. It is 30 consecutive days outside of China. Okay. One thing to keep in mind is that also with any deductions or allowances you receive, please make sure that you get these approved by the authorities accordingly. By the tax offices, actually, so that the allowances are automated. Why do I say this? I say this because actually you have a lot of foreigners who get allowances and their contracts have never been approved by the tax bureaus. And then suddenly at the end of the year, the tax officer calls and says, actually, when you do your annual filing, the deductions are no longer applicable because your contract was never approved. Please make sure your HR department goes through the process of making sure your allowances are approved by the tax bureaus. Annual individual income tax declaration. So the law basically states that you do not have to, well, the law does not state that you have to do an annual income tax declaration. In practice, though, it is a requirement. Now, the procedure is that if you are earning more than 120,000 RMB on an annual basis, you have to fill out an annual individual income tax declaration online. So if you are based in Shanghai, Beijing, Guangzhou, Shenzhen, there is a website for you to go to, and you have to fill in all of your details about your total income. So not just salary, but any other income that you might be earning. And there's a whole bunch of questions that you go through. And normally this has to be done prior to March 31st of any year. One thing to keep in mind is that if you are not earning any other income, actually all you are earning is salary, maybe some commission, maybe some bonus, your company will withhold the individual income tax. And when you do the annual filing, if the variance between the two is less than 400 RMB, you don't actually have to submit the annual filing. But to figure out if there is a variance between what your company has withheld and what the actuality is, you still have to fill out the forms to figure that out. You might not have to press submit, but in my opinion, everybody should be pressing submit so that their paperwork and documents are filed and are done properly. Tax authorities are given stronger anti-tax avoidance powers, and this particularly plays for foreigners, where potentially you might have dual contract arrangements. Foreigners have dual contract arrangements because they do not want to declare their full income in China and pay the high tax rates that are in China. But in addition to that, they may actually want to keep a certain salary amount in Europe, the US, or wherever, because they want to maintain their social insurances in Europe so that they are gearing for pension. Completely understandable. If you are taking the route of having a dual contract arrangement, where you have a Chinese contract and you have an overseas contract with your employer, please make sure that these are not fake contracts. They have to truly reflect the situation. If you are a permanent employee in China, then 90% or 95% of your salary should be made in China. 5% can be kept in Europe because you might have expenses to get paid, or you might want to keep your pension. But in theory, you're not doing any work for that overseas entity, right? So your contract should reflect what you are doing for those entities in China. Your Chinese contract should reflect what your responsibilities are with that Chinese company, and your overseas contract should reflect what you're doing with the overseas company. It needs to be true and authentic arrangements. What you don't want to happen is that you are earning a huge salary, your role is huge in China, you are a managing director, whatnot, you've got high amounts of allowance, but your base salary is very low. This is already a suspicious item, okay? If you are receiving a compensation of 100,000 and 85,000 is allowances, and you only have 15,000 to declare as your salary, that is a huge suspicious moment, because no foreigner lives off of 15,000 RMB unless they are a new graduate or an intern or a young foreigner that has arrived in China. Okay, no 50-year-old is going to, or 45-year-old is going to live off of 15,000 RMB when they have a family of 4 to take care of. Don't make your arrangements so obvious that you are trying to evade taxes. This will raise suspicion and it will cause the tax authorities to reach out to you. All right. So what I want to highlight, and again, I'm going to reemphasize because some people have joined late, is the following. I have spent a lot of this time reflecting back on what was previous to 2018 and what the current regulations are from 2018 to today, and what new regulations are coming up by the end of December 31st, 2023, which is the allowance deductions. I've done that because when people start Googling and searching income tax in China and how to calculate it, they don't always look at the date that articles have been written. Please make sure you read nothing that is actually, my suggestion would be to only read updated articles from end of 2021. That is where you will find the true current regulations because they postponed the allowances end of last year. So you'll be able to do that. Creating a simulation is actually the best way for you to truly understand what your income tax liability is going to be in China. Talk to experts who will be able to create that simulation for you based on allowances or deductions you might get. What we have done, when these 3 allowances for foreigners were supposed to be revoked at the end of last year, we were creating parallel simulations of what is happening today and what would happen in the future. These deductions are supposed to happen by December 31st, 2023. You have now 1 year and 2 months to get these simulations up and running so you can have discussions with your HR departments about how this might affect you. The 3 deductions allowances are housing, children's educational expense, and I forgot the last one now. Hold on. Let me go back. I don't want to make a mistake, guys. Let me just go back. For those of you that have just entered, you might want to have that information. And language training. Housing, language training, and children's education expenses, okay? Create these simulations. There's nothing better than having concrete information in front of you so that you have leverage over how you want to have your discussions with HR departments. Same with HR individuals that are on here. Talk to your foreigners and understand and negotiate with them ahead of time how this might all impact them. I am aware of a lot of families that were planning on exiting China because having 4 children in schools and not having that as a deduction any longer, and companies not covering that, meant that it didn't make sense for them to stay anymore. So really look at your status, understand it. If you've got no children, this doesn't apply to you. But if you've got housing that's covered and language training that is covered, make that simulation and understand what the difference is and who's going to cover that difference. Okay. Now, the key considerations for individual income tax. The main one really is that you have to get it in your head that although your company is withholding taxes on a month-to-month basis, your actual income tax is calculated on an annual basis, which is the calendar year, the tax year, January 1st to December 31st. Make sure you are looking at your contracts and you are not avoiding to pay taxes. Your contracts have to be true and authentic based on the work that you are actually performing for the various entities in case you do have dual contracts. If you are getting your monthly payroll slip and you have doubts because every month your net income looks different, that is because of the aggregation of the income tax that goes from month to month. And that's what is being withheld from you, okay? Look at the standard deductions, additional deductions that are being offered to foreigners. Look at your, you can find on Google very easily the annual tables. I'm just going to highlight it one more time here for those that have just entered. This is what the annual income tax table looks like. Remember, you've got a 60,000 RMB automatic deduction. You find then what your gross annual taxable income is, look at the tax rate, and then there's a second quick deduction that is available to you. If you want to look at it from a monthly basis, you can, but remember the monthly basis is not fixed because your salary is aggregated month to month, and the income tax is aggregated month to month. Understand your residency status, especially for those of you that are not on permanent contracts, but are there for specific periods of time. We're just going through the process now of extending somebody's stay in China, and that's going to obviously affect their income tax status in China as well. What do you need to consider from an operational perspective? Again, this is for taxpayers, also for HR departments, but really as an individual, you should be prepping yourself for this. Taxpayers have to collect all domestic as well as overseas income tax payments and related documents. I can't emphasize this more. My aunt lived for 13 years in Hong Kong, never kept a single tax bill. And when she moved back to Paris, back to France, basically there's record that for 13 years, she did not even work or pay taxes anywhere, which meant that now in retirement, she is earning less because she has no track record. So I highly, highly, highly recommend all of you, when you go to China, because it'll be very hard to get your tax bills if you haven't kept them, make sure you get your tax bill, you get your payroll slip, and you keep these, because as expatriates, you need to maintain all of your paperwork and documentation. Any evidence relating to deductions, and allowances, make sure it's written in your contract, make sure it's approved by the tax bureau, and you have concrete evidence of this. And make sure you've got internal processes with your company or your HR department to maintain FAPIAOs, receipt collections, storage of paperwork and documents, etc. Okay, very, very important that you maintain everything. Now, the biggest question that comes up, which is a debatable question, I think everybody has a different point of view. What is the aim of the government by updating, changing, and implementing the individual income tax reform? And then further, come December 31st, 2023, everybody's assumption is that, oh, they want to keep foreigners out. I don't believe that. I don't think people want to kick foreigners out. I don't think the Chinese government wants to kick foreigners out. I think, number one, you have to realize that mainland Chinese employees don't get any tax deductions. And they want to create a fair playing field for all employees in China. And as a consequence, they are removing the three biggest tax deductions that foreign employees use, so that there is a fair playing field between Chinese individuals in that same role and foreign individuals in that same role. Okay. I think it's just a matter of really creating a fair playing field for everybody. Now, obviously, because of this regulation that is coming out, the biggest question is who fits the bill, right? Because the biggest complaint from foreigners is obviously, well, my net salary is going to look very different without having these deductions available. And I want that to be covered, because what I want is that I continue to earn the net income I was promised on the day that I arrived in China, which I completely agree with and think is fair, which is why it's an HR issue. You need to talk to your companies about covering that tax differentiation so that you continue to earn the same net salary as you were earning in the past. That is critical, and that's up to your company to decide. It has nothing to do with the Chinese government. If your HR department and your company is not willing to fit the bill, it is your choice whether you then want to stay in China, continue working for them, or get sent back, or look for a new job. Okay. I truly do not believe it's the government's aim to say, we don't want to kick anyone out. And the reason why I say that is because they are actually trying to get highly skilled foreign intellect into China, which is also why during COVID, they made special regulations on these highly skilled foreign intellectuals to be able to come into China without getting PU letters. And a lot of people don't mention that in the media. So I don't believe that. And I don't see any trend of that actually happening. What I see as a trend is the fact that HR companies or HR departments and companies are not willing to fit the bill, ultimately. All right, which is why it's very important, again, to have that discussion with your HR. And now, it's been extended for 2 years up until December 31st, 2023, December 31st, 2023. Make sure you have those discussions again with your HR department. That's the end today. The whole point of today's conversation was really talking about individual income tax. It was really talking about how to calculate the income tax. And if you need help to then go to a provider to get the simulation. Hamza, I don't share my slides for proprietary issues. So you can always look back at the recording, which will be sent out to everybody. And then you can do a share screen if you like at that point. But I'm not sharing the presentation, unfortunately. So you guys can, again, like I said, look at the recording. I would love to hear what everybody's feedback was on today's presentation. If there are any questions, ask away. Don't hesitate to ask. If you want a little bit of background on us and what Woodburn can do, we are basically a corporate services firm in China. We do all accounting, tax, payroll, outsourcing solutions. We do simulations and all of this work for individuals. We can also help in terms of company setup and all of that. But we're basically your outsourced finance HR department, if you will, admin department in relation to compliance issues in China. So if you've got any questions on that, let me know. If you are in the HR sector and you're looking to figure out how to employ talent in China, or you yourself, you want to understand what your income would look like in China and what you would be earning as a net salary, to see whether it makes sense for you, then set up a call. You can email me at Kristina@woodburnglobal.com, and I'd be happy to have that conversation with you. Just to finish off, you have subscribed to our Thrive in China Roundtable. The next sessions are the following. Next week, we're talking about social insurance obligations in China for both locals and foreigners. We're going to be looking at the top 20 tips to understand China's business culture. We're going to look at low-cost training, because obviously everybody's on a budget, how to find the right people for your organization. And our last session for 2022 will be on risks, precautions, fraud, how to manage HR, how to manage these sticky situations that people get into, and what you can actually create as internal policies to protect yourself and your company in China. So you should get updates on this anyway, but don't forget, you'll also get the recordings in case you can't come on. There are no questions that have popped in so far, but I'll wait a couple of minutes. But in the meantime, thank you all for joining. And those that are watching on record, don't hesitate to reach out if you've got any questions. I wish you all a fantastic day. Take care and goodbye.